Hello everyone, welcome to the first class of regulation. I am Varun Jain from ICP Review and I shall now take you through US federal income tax for individuals. Now, in the US, all income taxpayers need to file Form 1040 with the IRS, which stands for Internal Revenue Services. This portion of the CPA exam has extensive amount of information with loads of tricky inclusions and exceptions which the examiners love to test. But I'll make sure that this section is a piece of cake. Before we kickstart on our mission to nail this complex set of rules, let us start with understanding the larger picture over the next 10 minutes. Guys, look at Form 1040 right on page 1 of your book. Around the center of the page, we have a section on income and then adjusted gross income. Do note that the last line on this page reads, "This is your adjusted gross income." Now, turn to the next page and you see a section on tax and credits, which includes deductions, where we have an option of standard or itemized, exemptions and tax credits. Next section is other taxes, payments and then amount you owe. Now, we have devised a bunch of mnemonics for you to remember all those items included under these broad heads. Gross income is split into two parts. The first part is for schedules that we attach with the 1040 and the next part is as I row up, which is the mnemonic for all the items that appear directly on the 1040 without any schedules. So, you rich future CPAs, you just sailed up on a luxury yacht. As I row up, and as true gentlemen and ladies, you included all your income on the 1040. The IRS has got its eyes on you. They want a big chunk of your income as taxes. This gets you stressed. So you park your lovely yacht and set swim. So friends, here is your stress buster mnemonic for your adjustments from gross income. Had, set, swim. So we've had a lot of adventure now. Let's come back to this class and to my CP review, because your next mnemonic for itemized deduction is Miles takes interest in charity and casual jolly meets. Now, this happy-go-lucky mnemonic where Miles is doing charity, making casual meets, gets a little serious when the IRS attempts to reverse some of these itemized deductions with a secret weapon known as the AMT, which is included in other taxes here, and the mnemonic for that is Miles takes interest in just meets. So charities off, the casual and jolly all are gone. Now guys, we are done with 4 mnemonics and I agree it's real mind-boggling. But you smart ASDers will certainly not lose out on the tax credits. So we give you a simple memory aid for tax credits, which is ASDer having first break. So you guys get on to a break time now. This entire section is rowing up, swimming down, the happy miles with charity and casual jolly meets, the serious miles with just meets, and then you ASDers asking for a break. We will now quickly take a look at what all these 5 mnemonics we learned just a while ago actually stand for. We start with gross income. Now, this is all your income from all sources that you've earned during the year. Your salary, your interest, your capital gains, social security, scholarships, anything and everything that makes you richer. Now, gross income is split into schedules that we attach with the 1040 and the as I row up mnemonic, which are items which are directly put on the tax return. We have Schedule B for interest and dividend, Schedule C for your self-employment business income, Schedule D for capital gains and losses, Schedule E for passive income. This could be rent, royalties or K1 income from partnerships and S-corps that flow through to your income statement. Schedule F for farm income. Now, the as I row up mnemonic, the A stands for alimony received. Now, this is cash received for alimony, not any property or child support. Guys, remember the SAD requirement where S stands for separate, A stands for agreement and D is death. So you're divorced and you're sad. The S of AS stands for Social Security benefits. These are amounts that you receive from Social Security. It's all the money that have been deducted from your salary all these years, or the money that you've put aside from your business income. I stands for IRA distributions. This is money that you receive from retirement plans. We will soon study in detail about all the types of IRAs. For now, just remember that distributions from traditional IRAs are taxable and those from Roth IRA are non-taxable. The R of RO stands for refunds of state or local taxes. Now, if you have itemized your deductions, you are allowed to deduct for taxes. So, in case of refunds, they are taxable. O is other income. This is everything else. Your prizes and awards, punitive damages from lawsuits, scholarships, jury duty, gambling winnings, and even illegal drug income. The W of RO stands for wages, salaries, and tips that you receive from your employer. Now, your employer is going to give you a form W2 for all the wages and salaries that he pays you, and you're supposed to attach the W2 with your 1040. This is not a schedule because, unlike a schedule, you don't fill it up. Your employer fills it up for you. Moving on to UP, the U stands for unemployment compensation. If you're unemployed, the US government gives you unemployment compensation, but IRS has got its eyes even on that. Pensions and annuities, the IRS leaves nothing. Now we shall talk about adjustments. Guys, and as we had seen in page 1 of our 1040, the gross income less adjustments got us to the AGI, or the adjusted gross income. And we had our favorite stress buster mnemonic, had, set, swim for adjustments to AGI. These are also called above the line adjustments. Now, elaborating on had, set, swim, we have the had standing for HSA deduction, which is the health savings account deduction for amounts paid directly by the employee. Alimony paid. Now, if you recall, we have alimony received right here in gross income. Let's say the husband is paying the alimony while the wife is receiving it. The husband is allowed to deduct the amount of alimony paid as adjustment, while the wife is supposed to be adding the alimony she receives in her gross income. D stands for domestic production. These are deductions allowed for businesses like film production. Moving on to SET, we have S standing for self-employment taxes. In the US, the employer and employee each pay 7.65% social security taxes. But when you are self-employed, you pay the total 15.3% from your pocket. Now, the IRS pretends to be generous. It says, buddy, you can take that 7.65% which you paid as your own employer off your income. Wow, can't say too good. Take it first and then make me happy because I can deduct it. There's some more adjustments for benefit plans for self-employed folks like Cure Plan, SAP, Simple. We'll study about all of that. E stands for educator expenses for school teachers. Then we have tuition and fees, which are expenses for higher education and allowed as adjustments. The SWIM is student loan interest, which is the education loan interest that you're paying. The W stands for withdrawal of early savings penalty. For example, when you withdraw your IRA too early, your penalties are deductible as sort of forfeited interest which you actually did not receive. Then we have the IRA contributions. Now, this is the deduction on your contribution to IRA. Now, in IRA distributions here in gross income, we had noted that distributions from traditional IRAs are added to gross income, while Roth IRA distributions are not. With that same logic, please also note that only contributions to traditional IRAs are deductible. Roth IRA contributions are not deductible. The M of SWIM is moving expenses when you are moving your job. Now we shall look at deductions from AGI or below the line deductions. These could be standard or itemized. Now, standard deductions are a fixed amount of deduction that you get for yourself and your spouse. But there are a bunch of people who prefer to itemize the deductions. If you remember our mnemonic, miles takes interest in charity and casual jolly meets. These are our itemized deductions which go into Schedule A. Now you'd ask me, why would someone make the 1040 more complex? To save money, buddies, Schedule A is used by taxpayers who get a higher amount of deductions. These deductions are medical expenses, the M of miles. You go to the doc and you pay him, you're allowed to deduct it in Schedule A. However, there is a major hindrance that expenses need to be in excess of 7.5% of AGI. The T of takes stand for taxes. These are taxes paid to the state government, local government, foreign government, but not federal government, because the 1040 is itself a federal tax return. Now, interest in miles takes interest is the interest paid on home loans and net investment interest expense. Now on the Schedule B, where we have the interest and dividends, we have the gross interest income. We are not allowed to deduct the interest expense here, so we put it on a Schedule A. Charity. Now IRS is very good to you if you are philanthropic. Casual is for casualty and theft. Again, this is in excess of 10% of AGI. Jolly stands for job expenses. These are business expenses incurred by you but not reimbursed by your employer. This could be job travel, laptop, uniform, job education. Also miscellaneous deductions like safety deposit box and tax preparation fees. Again, these need to be in excess of 2% of AGI. The means of a mnemonic stands for miscellaneous. These are gambling losses. But gambling losses are allowed to be deducted only till the extent of gambling winnings that you had reported in other income of your gross income. Now, all those smart chaps who use Schedule A to increase the amount of deductions also need to fill up Form 60 to 51 to check if the amount of deductions is too high so that IRS can take it back from you in the form of alternate minimum tax. It's like preparing another set of returns. For now, just remember the mnemonic, miles takes interest in meets. Very serious mnemonic compared to our mnemonic for itemized deductions. What I mean to say is, AMT rules allow us to deduct only few of these itemized deductions, and that too with additional conditions. For example, the condition for medical expenses deduction increases from 7.5% to 10% of AGI. Taxes are allowed, but trust me, it's more or less nothing. Interest on home equity loans. You are not allowed to deduct interest on acquisition loans. We'll get to that in a moment. Charity is off, casualty is off, jolly is off. We only have meets, which are miscellaneous expenses like gambling losses. Now guys, we've seen gross income, less our adjustments, mnemonic hat, set, swim, which gets us to the AGI. From AGI, we again deduct standard or itemized deductions to get to taxable income and calculate our federal income tax depending on our tax slab. Now, from the calculated taxes, we are also allowed a bunch of tax credits, which are a dollar for dollar reduction. Woohoo! Use the mnemonic A's dear having first break, where A stands for adoption credit, child tax credit, and education credit. The D stands for the dependent and child care credit, earned income credit, elderly and disabled credit, and retirement savings contribution credit. Having first break, where the H is for the home buyer first time credit. F in first is the foreign tax credit, and the B in break is for business credits. Now, this is really too much of info. Let's stop now. We are done with the test run. Now friends, pull out your book and we'll go for the kill. As we read through the book, let's understand all rules and exceptions for items that are tested on the CPA exam.